to this week's Fireside Chat with Jesse. I am joined today by Scott Williams, Vice President of Cass Equipment Finance. Thanks for joining me, Scott.
Thanks for having me, Jesse.
No, it's great to have you on here, sir. I'm glad we can, have the opportunity to talk about a relatively newer player to the equipment finance market in Cass, and want to learn more about your career. So
Awesome.
I guess I'll just jump right in here, man. For those people who haven't met you yet, do you mind just kind of introducing yourself and your career to date in equipment finance?
Sure. Scott Williams, Cass Equipment Finance, as mentioned. Started in the industry in November of 2001 at Fifth Third Equipment Finance. At the time, Fifth Third Leasing was a commercial finance officer in the bank and networked into the equipment finance company. At that time, I was doing basic pricing for equipment finance as well as rolling out a CRM system that was gold mine at the time. And yeah, that was a long time ago, and many CRM systems ago. And eventually ended up carrying a bag there, doing direct originations in Western Ohio. Then reverted back to the mothership to help out with special projects, became the pricing manager with expanded capacity. Was there for about 12 years, then moved on to Commerce Bank Equipment Finance. Did that for about 8 years, was a pricing manager and also dipping a toe in originations there. About a year and a quarter ago, I moved to Cass Commercial Bank to start a direct originations platform for the bank, expanding its capability in equipment finance. They had been buying non-tax debt strips off of high credit quality leases on the indirect side, and now we're moving in towards different origination channels, both direct and additional products on the indirect side.
Perfect. Thank you for that introduction. So, from a commerce perspective, are they in Ohio as well? Was there an office there?
There is, yeah. They're in actually Westchester, a bedroom community outside of Cincinnati. They bought the Vaughn Group, and that got them the systems and some of the people who are still there. Some still my friends, but
I wasn't sure because I know Cass is out of St. Louis as well, and I'm like, but didn't never put those two and two together.
Yeah, the guy who used to run Commerce Bank's equipment finance company went to be the president of Cass Commercial Bank, and that was one of the easing of the process over there. But you do bring up a good point that Cincinnati is not only a Midwestern paradise, it's also one of the cradles of equipment finance. We've got a lot of
Midwestern
subjects.
I mean, the guys from Great American Insurance and Rinaldi are gonna love that comment, man.
Yeah. We got Four Seasons, we got Major League Arts, we've got Major League Education, we have little traffic, great cost of living, and a robust equipment finance industry here.
And you have some good bourbon and some good beers with bourbon in it. So,
Yeah.
just saying.
And some good foods. Yeah.
Yeah. Skyline, right?
Yeah.
It's a staple.
I'm a little biased, but I put this out on LinkedIn a couple days ago. Skyline switching from Pepsi to Coke products, which is a rift, but welcome in my opinion.
It's fine. As long as, they should serve beer,
Some of them do. It's one of the better ways to take in 2,000 calories in a sitting.
Okay. That's awesome. So, Scott, do you mind talking about Cass Equipment Finance? I know you mentioned you guys are just getting started, but talk about some of the business channels you're going after, et cetera.
Yeah, appreciate the opportunity. Cass Equipment Finance is a division of Cass Commercial Bank, which is a commercial-only bank that's based in St. Louis. It has a few different groups. They focus on C&I lending in St. Louis. They have a franchise finance group that's nationwide, as well as a religious, like church finance group that's nationwide, and an equipment finance group that includes George Hoffner and myself. Historically has been on the indirect buy side. Right now we're branching out to doing more direct origination with those other groups in mind, as well as one of the remarkable things about Cass Commercial Bank is that it's a subsidiary of a expense management fintechy kind of company where Cass Information Systems makes payments on behalf of the Fortune 1000 to transportation companies, waste companies, utility companies, and telecom companies. So the Equipment Finance Group's manifest mission is to do business with Cass Information Systems financial friends, as well as other high quality prospects.
And you are in Ohio, and where's George at?
He's in St. Louis,
Is
and
he in St. Okay, and Eric in St. Louis.
yep, and my boss Eric's in St. Louis. He's the head of commercial, and
Okay.
Dwight Erdberger is the president of the bank. The size of the bank is a little deceiving for what we do. We do much bigger ticket transactions and have bigger hold limits than equivalent size banks, and we're a commercial only bank, so we don't go after mortgage loans for people's residences or jet ski loans or individuals deposits and stuff like that.
Come on, you want to do the Rolls Royce, and then maybe you can repossess it.
Sometime over a cocktail, I'll tell you about financing a very particular Bentley.
This guy has bad credit, but you know what? I'm gonna have a big old smile on my face and take it back. Thank you for that. So do you mind just kind of talking through the startup process? And I know it's been a long time coming. So any pros, cons, just overall experience, Scott? I mean, because when you went to Fifth Third, obviously that's a really big organization, and then Commerce, they've been in the industry forever. So what's it like saying, okay, I'm going to start this thing from scratch?
I think the key is to have executive and stakeholder buy-in. So everyone's got to want to have the same end result. If you start with that, you're heading in the right direction. And then you have to do a needs analysis, figure out what you got, where you want to be, and what's the difference, how are you going to fill those gaps. In my personal case at our bank, we had sophisticated credit approval, CRM, funding mechanisms, their documentation and back office for loans, but not for the complexities that we have with leases and more complex structures. So first thing to do was to identify those gaps and then figure out how we could bridge the gap. And it seems like maybe there's three ways to bridge the gap. You can either build something, you can buy something, or you can rent something. And when I say thing, I'm talking systems and people and processes. Sure. It's really expensive to build something, but you get, and it might even be impossible. But it's an option, right? So you want to explore all the options. The pros are you get exactly what you want. The cons are it's going to take a while and it's going to cost a lot. If you buy something, you pretty much have to look at it from two perspectives. You buy a whole group and do a lift out and buy all their systems and buy all their people and their processes. That means you're choosing from a limited market of existing opportunities, which sure. Is sort of like microcosm of life. But if you find the one you like and that entity is willing to sell or partner with you, that's an option. The other is to buy bolt-on assemblies. You maybe buy an accounting system, maybe you buy some front end system, maybe you buy some tech that makes the middleware work, and some tech that makes the front end work, and some tech that does some sales tax. But then you also need a lot of people to make that happen. It's not trivial, the amount of details that are involved with what we do on a daily basis. Like, sure. And they can be overwhelming. So the third solution, to where we ended up, is with like an outsourcing or renting a solution. So you switch the cost structure from a high fixed cost and medium variable cost to a mostly variable cost solution. And you also limit risk. If you buy or build, you're only yourself to blame if things don't work, and you're only relying on your experience and acumen and expertise in building exactly what you want. You might have a perfect sure. idea of what you want, but building it's another story. So we came up with hey, we started down the middle path, like let's go this way. and then either scope didn't change immensely. Scope does change, but there was sort of the realization that we might not get home with what we want to have at the end of the day, and it's going to take us a lot longer to originate deals, led us to go the outsourcing route.
Sure, sure. I mean, I think you just hit. That's a perfect commercial for Orion, Great Great America, ECS, and JDR.
You hit the nail on the head. And
No, and I think you. I mean, the minimizing the risk is key, right? Because then you don't have all this, liability on your books, especially where you're like, okay, when's deal flow coming? When can I do this? When can we finally go?
yeah, and especially bank environments tend to focus on credit risk, and it's changed with the flaring up of fraud incidents and bad actors. But there's also operational risks, and uh, every transaction has counterparty risk, but there's also this other operational risk level that you gotta minimize that. Hopefully to zero. Practically, you'll never be exactly zero, but you got to take every step you can to eliminate those non-credit risks in your transaction.
Sure. Nope, nope. Same page there. And one of the questions I forgot to ask earlier is from the buy side. What are you guys looking for in transactions? You said middle ticket levels, but any particular
Honestly,
asset classes?
on the buy side, we're at the very top tier of the credit shelf. So we're looking at investment grade or near investment grade credits. We're
Okay.
collateral agnostic. We do prefer transactions with the direct end user rather than multiple layers of parties in the middle. But we're
Okay.
looking at those very large companies, and we have a sharp enough pencil uh, to be able to get some of that done. So uh, we're in
Okay.
a good spot there. We sort of view that as an alternative to a bond portfolio.
Got it. Okay. Thank you. Sorry, I should have asked that earlier, but
No, it's a great question, and it does lead into okay, so what are we looking for on the direct side? And that's sort of a to be determined because of our initiative to deal with the financial friends of our parent company,
yep.
and it's certainly not going to be able to meet the lofty investment grade because there's only so many investment grade and hundreds of millions of dollar revenue companies out there.
Sure.
But being able to play in both arenas allows you to bring to the middle market transactions some of the concepts, structures, planning that are involved in some of those highly structured uh, transactions that drive benefit to the shareholders of those big companies.
Perfect. Thank you very much for that. I'm going to sort of double back to the startup process, if you don't mind.
Yeah, yeah, let's do it.
So, when you go to Fifth Third, you go to Commerce, they already have these policies, procedure, even things simple as docs. They already have all that. Now it's like, all right, Scott, where's that stuff?
Yeah, and docs are actually um, they're hugely important because they cement the agreement between the parties, and but they also have to sort of cover all the eventualities. So you have to through that you have a chicken and an egg problem, right? Because you need to have your counsel create a document that addresses issues that you might not have fleshed out exactly how you're going to handle. Um, only the only solution I think is to bring in experienced counsel who's done it a bunch of times before, and they sort of know what is market acceptable and they know what other lessors have. So you kind of you kind of make your uh, requirements sort of fit what existing people have done because they've had to contemplate those same problems in the past that may be
Sure.
in front of you. And so that's what makes it fun, right? Slaying dragons, looking at the big problems and finding ways to solve them. If we didn't have that, probably it wouldn't be anywhere near as interesting. I probably wouldn't be doing it if there weren't big challenges.
Sure. I just kind of like, I worked for bigger organizations before I went on my own. And now it's like, all right, where's that? Who's going to create that? Who's going to do that? And I turn around and look at an army of one, and I'm like, I
Right.
guess that's me.
Or it's finding a partner who knows it, and especially in some of the stuff that's practically extremely difficult, if not impossible, for a generalist to solve for. Like you could spend all your time trying to figure out how over the road transportation gets taxed inside versus outside the city of Chicago and Cook County. But you probably shouldn't spend your time doing that. You should probably find someone who's already figured that out, partner with them, and make it happen. So that's
Nope, nope, same page. And so, what's it like? I guess working for a, I don't know, like Fifth Third, massive organization, Commerce, little smaller than Fifth Third, and now like at Cass. What's that like on a day to day, Scott?
there's benefits to both places at both sizes or all sizes, and you kind of have to be flexible enough to adjust to realize that what may have worked in one environment is not going to work in the existing environment. Um,
Sure.
one of the huge strengths of Fifth Third was they had they had a lot of amazing opportunities where if you could apply yourself, there was no one really stopping you from solving problems and improving and making things better. And they were in a hyper growth mode, uh, especially the equipment finance company, but the bank in general. So there was just opportunities all over the place, and their their thesis is a more of a now, and maybe even then was more of a Wall Street driven focus, whereas Commerce was less Wall Street focused.
Hmm.
Um, uh, Nothing wrong with it. They're all three entities I've worked for are publicly traded entities, um, but it's a different ethos. So at Cass, the parent is determining like what it is that we're doing. Not on an individual like tactical basis, but they're setting direction for, hey, let's all row in this direction, right? Um, and then the bank facilitates a lot of the payment support and um, backup for the parent company. So it's a different dynamic. It's also a lot smaller approval chain for credit. So there's if you get three thumbs up, your deal's good. Um, Whereas at other places, you might have a committee process, you might have an extended approval process with additional bureaucratic or personality approaches. It looks like
I lost my heart, man. I don't know
you're
what happened there.
switching to the NCAA.
You know what? It's actually what it's telling me. It's like stream some basketball.
The neural link is working.
Well, that's
I know
embarrassing.
I know this is going to be
Oh,
broadcast later, so for anyone who's watching, I'd like to make a prediction on the NCAA.
okay.
I feel as though Kentucky's going to lose in the first round.
You know what? And it's Thursday before any game started, so you know what? I don't see it coming. But if it that does happen, who do you think is going to actually win the tournament?
I've got Houston, but I haven't watched any basketball this year, so
I don't know. As you know, this is my alma mater.
yeah.
Actually, Dave Gruber from Cincinnati, Great American Insurance, reached out today, and West Virginia is going to be in Cincinnati in November. So
Ah,
yeah,
you'll be there.
I'll be there. Yeah,
All right.
little Big 12 action. It's
Yeah.
fantastic. Um, so in the last, I guess, 15 months, like what are some lessons that you've learned, Scott, from starting from scratch?
Well, I guess number one, it's humbling that you think you have this perspective on everything that happens, and then you realize that maybe you had a thin perspective on everything that happens. You know what all the plays are, but you don't know all the things that go into it. So when you're in more of a bureaucratic organization that goes through a series of processes and approvals, and everyone does their little bit, like an assembly
Or
line, whenever
yeah,
you're crafting, and I thought at the time we were crafting snowflakes because we were putting together deals that were like uh, making the customer happy, making the bank happy, making each one of the disciplines that the customer thinks about happy, or focusing on their KPIs. But it was really the team effort of putting that snowflake together. And whenever it falls to mostly you to put that snowflake together and you have to cover everything, it it makes you really appreciate not that you didn't appreciate the people before, you definitely appreciated their work product, but you didn't have the exposure to what it was that they were doing on a daily basis. And once you get that exposure, you're like, wow, um, there's a there's a reason.
Pick up cell phone, text person. I just want to say thank you for all that you used to do.
And that's the good thing that, like, as other people said on this show before, that's one of the great things about the industry is like there's so many different complexities that, like, there's some stuff I'm really good at, but there's some stuff that I don't know anything about. And I have friends who know the stuff I don't know, and they frequently or occasionally call me for my expertise and vice versa. And
Uh, No, it's that's perfect. It's a perfect segue into kind of like industry relationships, Scott, that you built throughout your career and kind of what they've meant to you.
pretty much everything. Because I don't think I wouldn't have got started in the industry if it hadn't have been for folks like Dave Jackson and Dave Merrill, who were able to pull me out of the corporate finance function at Fifth Third and give me a chance. And then hopefully I repaid that with 12 years of making it happen. And I also try and pay it forward by helping out credit analysts, documentation folks, along anyone who was trying to learn something that I already knew, freely share it with them. Whereas, the old school approach is to kind of guard your information, um,
Yeah.
and then try and monetize it or use it for power or clout. And I've been fortunate enough to have a lot of bosses who have said, if I make you more important and you more powerful, it makes, it only can help me, right? It only help the organization, because then you're out there doing the same thing and replicating it and bringing along the next group of people. And that's how you, as far as I can tell, that's how you build the culture of success and winning, is by having a team where when one person wins, everyone wins, and when everyone wins, all the constituents win.
No, perfect. Same page. And yeah, those are two good individuals that you mentioned there before. So
Yeah, and I can't mention them all, so I felt I was almost not going to mention
hey, no, it's
them.
okay. If Scott didn't mention you, he just didn't mean much to him. So we'll just kind of leave it
Yeah, absolutely not true. I got air cover from some
at
documents that I may have made.
hey, this is having some fun. So, what are your thoughts on as we're going further into 24? Rates are holding steady for now. Obviously, election year. What are, I guess, your current thoughts on the state of the industry? Now, keep in mind we are in March and we have 3 weeks before this airs.
Yeah. So we were just talking about this before the recording started. Um, the tax side of our business is dramatically changing as we speak in the halls of the Senate and our Congress, and then signed by the government. So we got to keep our government funded, and then a key attribute to tax leases relevant is depreciation, is business interest deductions. It is a lot of the stuff that's in play right now. So we've got, my understanding, I was maybe not going to bring it up, but in my learning of this industry, uh, early on, you get befuddled by all the different disciplines that are involved. So I kind of built a matrix of here's what's important. So whenever I think about overall industry, I think about legal, I think about tax, I think about book accounting, I think about economic factors. So PVs, as well as like GDP and overall economic approach and recession, onshoring, nearshoring, all that kind of stuff. Sentimentality, the beliefs of lessees and business owners, and regulatory and audit focuses of companies. So a lot of that stuff has flexed in the last 2 years. We got Topic 842, so we have new book accounting rules. We have tax cuts sunsetting, tax cuts going in. We have exogenous forces outside of traditional models, geopolitical stuff going on. So there's a lot in play. And I think that's always an advantage to our industry because we've got some brilliant people who are always working on what's the best way to make to make a deal happen. A lot of advantage players, a lot of people who can size up a transaction, break it apart, and distribute the benefits to multiple parties so you can expand the pie and get away from zero sum games. And that's the beauty of the industry, is to not take the path that everyone else is taking, to break existing trends of, oh, we always do a loan, oh, we always do this, we always do that. Well, when you take a critical approach to evaluating what your key performance indicators are, and then you can re-examine whether the decisions you've made are the decisions you should continue to make. It, as all these different vectors change, the outcome could be different. It might make sense for you to do a loan today, but after this tax package, it might make sense for you to do a tax lease. It might make sense for you to be floating now. It might make sense for you to be fixed later. So that's that's what gets me excited about the industry and about coming to work every day, is that you get to see a new puzzle and try and figure out a new puzzle. How are we going to build something that's going to maybe be better than what we got already?
No, and from a spreadsheet perspective, in our time working with one another, you're definitely that guy. You know how to put together some spreadsheets.
Well, another,
hey man, I'm just envious because it's like, if I hit some and I do this and this, I'm happy, right?
yeah, that's so I also break it down like this direct sales process into whether you're dealing with a CPA CFO or whether you're dealing with a business oriented CFO. But another benefit that we bring is to take the equipment finance part of a CFO's or business owners off their plate, so they don't have to focus on how am I going to find the best way to finance this widget maker, right? Their job is to figure out how to whether they should be making the widget, how many of them they should make, whether the process is the best, and
Sure.
dabble in buying equipment 3 times a year. We figure out how to finance equipment every day of every year. So being able to create that spreadsheet, but then being able to articulate the value to the prospect, you got to be able to do both. And I'm not
Sure.
saying I can do both in all cases. I'm saying I try to do both, and that gives me a chance.
He said it, folks. He can do it all.
Write it down.
Hey, and if it's on the internet, it has to be true. So
Yes, yeah, and that's why I'm not worried about AI, because data becomes information, and information becomes knowledge. But yeah, you got to have intelligence to apply that knowledge to a particular situation, and I don't think there's humans involved in making that decision. You can't quantitatively decide this is the optimal solution because sentimentality or prior experiences of the borrower
no,
could overwhelm.
it's good as it's a good as a support tool. I mean, it expedites a lot of information gathering and output. That's
Yeah, it's good for some stuff, but I think our
yeah,
business is going to
yeah,
be good for a little while.
yeah. So Scott, I ask everyone who comes on here to give me a little fun fact about themselves. So anything you'd like to share with the audience?
Yeah. So when I was born, there was no vice president in the United States,
Oh,
which has happened multiple times in the history of the United States. But I'm prone to going down a spider hole of Wikipedia, and I ran across that one the other day.
I was going to say I don't think it's happened in my lifetime, but
No,
what?
it has not.
Okay.
No, Spiro Agnew resigned, and then Ford stepped in to be vice president. Then Nixon resigned. So Ford is the only president to have never been elected president or vice president.
Feel like I
Which,
want to have that like GI Joe thing kind of come on the screen. Now you know.
well, if you look at like geopolitics and you look at an economy, you look at everything that was going on around then. It's like, man, it doesn't repeat, but it does rhyme. There's a lot of similar themes that happen in.
Yeah. Uh,
So,
so
so Jesse, let me turn it around to you. Why don't you tell us a fun fact that we don't know about you?
mm, maybe my first job out of college was in retail.
Department store.
was a women's accessories manager for J.C. Penney.
Quality.
Second largest women's accessories in I guess at that time in 2003. Um, you know, I guess worldwide. So that was fun. They got to deal with a 21-year-old kid out of West Virginia and having 60 employees, and like, what's this guy now?
That experience has served you well.
Yeah, yeah. I guess I survived. I guess we'll leave it at that.
There you go.
So Scott, at the end of the day, why should someone want to do business with Scott Williams and Cass Equipment Finance?
Well, we have the expertise and the willingness to apply those expertise to prospective clients' businesses. When we look at all the different levels of people who are selling products that are similar to what we do, the very large entities are not willing to address the market in a full-fledged way of bringing in experts to the middle market to finance equipment, whereas we can bring experts to middle market companies to talk about how financing equipment affects the capitalization of their company, how it affects their return on assets, how it affects their after-tax income. If you're at a giant, if you're competing with a giant, they might have that expertise, but it's for the top shelf. You get a 1-800 number if you're a middle market guy. And the smaller shops might not have either the product selection because it's difficult to offer a tax lease, and they also might not have the expertise to figure out how it would apply to your particular financial and other situations.
Perfect. Well, I really appreciate your time today, man. It's good seeing your face. I think when we air this, I might even be with you at that time in Chicago at the funding conference. So
we'll watch it together and cringe.
Yeah, like, people at the bar, hopefully later in the day, people like, you guys are terrible. They're like, whatever, you know. Well,
right. Release it during the semifinal games or something.
Yeah. Well, I really appreciate your time today, Scott. Congrats on the new venture. Excited to see where things go with Cass, and we'll be talking soon, sir.
Thanks, Jesse. Appreciate it.
All right.
Cheers.
Have a good day.
All right. You too. Bye now.